Hey traders, welcome to another global macro update. Hopefully you're having a good week so far. I definitely am. We're going to start off this video by quickly looking at some of the economic data that came out this week and is going to be coming out for the rest of the week here. So core retail sales for Canada was below the forecast of 12%, but the previous was negative 20.7, which was actually better than the forecast, it seems. So it is actually improving to some degree, but we do see that it's not as aggressive of a jump back where we're seeing increasing percentages for the retail sales. CPI numbers for Canada, that'd be interesting because we are really looking at inflation and especially CPI numbers because this is going to be a really good indicator of the increase in the cost of goods and services within an economy. So that will be something to look out for in Canada. And we see some interesting stuff coming in the Friday. So we got some PMI numbers for GBP. And then we got some new home sales for America. So not a whole lot. I'm really looking mainly just for CPI numbers and GDP, consumer confidence, trying to understand the sentiment for the consumers, especially because the United States has been, the consumer has been a backbone of the United States. They have been extremely resilient, and they still have been. So this is going to be something that we're going to keep a really close eye on, as well as the CPI, like we said. So nothing crazy. So far, the Canadian dollar has been pretty weak throughout the entire move to the upside, where things like the Australian dollar, New Zealand dollar has been a lot more aggressive in their bounce to find a bid, where the Canadian dollar has not really seen the same level of demand. So it'll be interesting to see what it has for the rest of the week. So let's go back to the daily on the S&P 500 and start off the discussion. So let's close this. Let's bring this over and let's take a picture and discuss what we talked about yesterday, because yesterday we were looking at this candle right here, talking about the bullishness of it, and we wanted to see the price close above this key horizontal level of resistance, and we exactly got that. Now this is a huge breakout, breaking this descending zone as well as this consolidation or this basing pattern. We broke it, making a higher high. We made a higher low, holding the previous resistance as a new level of support and confluence to the descending zone. Lots of buy pressure here, and then we saw the next impulse move break the key level of supply right around here, and we got a nice higher high. So we could be expecting a higher low, but the overall momentum is definitely to the upside because we broke this major high right here back in early-ish mid-June. This is that major resistance. We can see key level of support back in the start of 2020. So the fact that we're above this definitely suggests that buyers are really present in the market, looking to actively reinvest and just continue the upward momentum. Like I said, we could have a pullback, but the overall direction, trajectory is to the upside, and our key level of support is going to be 30 to 36. Somewhere around there is going to be the main level of support that if we do get a pullback, I would like to see the price hold. But it's very clear, easy to see on the chart because we have the June high, which was a pretty significant outlier from the absolute monster move up to the move down. And then we were holding that zone for a while, seeing higher lows, squeezing the price closer to the apex of the ascending triangle pattern, where you see a horizontal level of resistance and an ascending level of support connecting the higher lows, squeezing the price up. Buyers are putting pressure on the sellers each time, not letting the price make a lower low or even getting to the previous low that it had. So this is extremely bullish for buy pressure. We got a break, which was an impulsive move, and like always, markets move in impulse and corrective moves. This was an impulsive move. We're looking for the corrective move to validate the previous resistance as a new level of support and then continuing the momentum to the upside. You could be looking to connect the series of lower highs on the corrective move, giving you a potential descending triangle formation. But the overall direction and momentum and trend is still going to continue up, which is going to set up a potential risk on environment for the rest of this video. All right, so let's quickly go on to the other global markets. I do see a question from Dieselman. We will talk about FX when we get into the DXY section, or the US dollar currency section, because that is talking about currencies, and we'll talk about your question in that area. So we'll get to it in about 5-10 minutes. We're just going to go through the US equities and then global equities, and then we're going to jump right into the currencies. So it's a pretty structured video, but we will get into it pretty soon. So stick with us here. Next thing, quickly discussing the Russell 2000, previous resistance, new level of support, making higher lows. We can see that right here. So overall, really bullish for the small caps as well. They have not been as bouncy, or they not have been as aggressive in terms of the buy pressure to push the price up after that huge March meltdown. But we do see buyers present in the area, creating an ascending triangle break, retest of the previous resistance to new level of support. And it does look like we are getting another move to the upside, very similar to what we had right here, where you see resistance multiple times, which then turned to a nice new level of support. And then we got a continuation. So we got a resistance into a support, and the continuation looks like we're going to test that June high. And what's interesting is the SPX is relatively stronger than the Russell 2000, because we can see the Russell 2000 has not hit the June high, where the NASDAQ, the S&P, and for example the DAX and the Japanese stock market index and Nikkei 225 has hit the June highs. Quick look at the NASDAQ. We do see that, actually I'm going to switch this to NQ because I'm just looking at the futures. So let's go back to the daily chart. And this doesn't provide any gaps. So that's kind of why I switched, is just the fact that I don't love to see gaps within the price action. I just think it looks a little bit messy. So we're just going to put our nice little trend line connecting the higher lows right here. Pretty well respected, I would say. And then we're going to be looking to add in a resistance as well. And I just like putting a projection to give us a little bit more room for the price to breathe. And then we got our nice little channel. We could draw a channel from here, 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 but this is going to be the larger daily channel that we do see. So we see previous support, not absolutely perfect. I'm just going to go from this wick high, and this is going to be red because it is a key level of resistance. So not an absolute perfect channel, to be completely honest, but it will do. I think that's going to be where I'm going to put that channel, right around there. And then we'll get a projection, and then put the projection over top, and then we got our nice channel. And then we're going to use the smaller time frames to view the key levels of horizontal support and resistance. We see very strong levels of support right here. And we also see a midpoint where we see a previous level of resistance potentially turn into a new level of support right around here. So that's going to be the two zones that we currently see within the market. We did hit the previous high right there, so we're currently double topping, which isn't absolutely ideal, but if it does hold this previous resistance as a new level of support, it could just continue the trend towards the upside. So let's get our brush. So it'd be nice to see kind of like this, because then you could draw in a nice ascending trend line connecting this low, this low, this low, and potentially this low. So then you get a nice upward movement, something like that. But right now, the NASDAQ is just hovering at the highs here. It's looking pretty good, but the S&P recently broke its key level of resistance, so that's going to be the main reason that I'm more definitely in a risk on sentiment. I think what I might do is actually bring this down a little bit, because it's not connecting the lower kind of highs right there. So I think that's going to be my zone. Unfortunately, it's not ideal. It's not absolutely perfect, but sometimes that's how it goes. Let's just move this over a little bit. I think this might be the high, just the wick high right there. So it's a bit expanding, which isn't absolutely terrific. Okay, I'm going to leave it like that. All right, now we're going to go on to quick discussion on the VIX. Not a whole lot to talk about. We're just seeing a decrease in volatility, except for recently where we're seeing a little bit of a slight fall within the S&P. But overall, we're seeing a fade in the VIX, which is exactly what we're looking for. That is the ideal situation for risk on, and that's what we're getting. So awesome on that note. Quick discussion on the global markets. ASX doing really well. Probably because they're really heavy in the mining sector, and metals are really doing extremely well. Gold and silver appreciating at an exponential rate. And then we also do see the less common metals such as copper doing well, palladium, platinum, uranium, all seeing some appreciation. So it makes sense that Australia, that does a lot of mining, would see an increase. And then we see the Nikkei 225, which is a Japanese stock market index, not really doing a whole lot, just consolidating. UK not doing a whole lot either, but the DAX is making a move to the upside, breaking the previous June high. So the DAX is the strongest out of all these different indexes by far, but when you're looking at indexes globally, the NASDAQ is going to be taking the lead for the best index to invest in terms of relative strength. All right, now we're getting into the currency. So I will answer your question now. Diesel, hopefully you are still present. What is your opinion on the best Forex trading platform for a beginner? Platform. So you're thinking of a broker. It depends on where you live. I would say CMC Markets is a good one. Interactive Brokers is also a really good one to use. So those would be your two bets. Our two best bets, in my opinion. Interactive Brokers is really cheap for cost, and they have really good or low slippage, which is really good. So that could be an option for you. I really like their structure for their trader workstation, which is their platform on the desktop to actually trade. I love their system. You can set orders so easily. You can set OCO. You can set whatever orders you want. You can set stop entries with with targets, with stop losses, with trailing stops. You can kind of do anything. So I would say a really good platform would be Interactive Brokers because they are relatively cheap in terms of commission. They have very low spread, and I absolutely love the amount of options I have for order entry. So yeah, I would say would be the best bet for you. CMC is also an option. I don't know if they allow US residents or US citizens to use their platform, but I'm sure Interactive Brokers does, so you can use Interactive Brokers. All right, so we're now going to get into the currency side of this global macro update. So we were talking about the dollar absolutely collapsing, and we see this right here. We were holding a nice descending channel, forming lower lows and lower highs, very structured. And then what did we get now? We saw the break of this previous low back in June, and this is exactly in correlation, or in confluence, I should say, instead of correlation, in confluence with the S&P breaking to a new high as well. So there's capital flowing out of cash or US dollar and into indexes like the S&P, and we can see that directly on our chart. If we take the correlations of the S&P and the US dollar, they're going to be very negatively correlated. And we can see that right here. So we just got an absolute capitulation where we're seeing a meltdown from the descending channel. So we do get a little bit of a retest of this previous support into a new level of resistance. I'm expecting further downside for the US dollar, which means that we're looking for further risk on exposure in the financial markets, which means that we could be looking at longing equities, crypto. I think gold and silver will be doing real well as well to continue the momentum, because we're seeing weakening and the depletion of the value held in US dollars. My personal opinion. All right, so that's going to be the US dollar. Quick look at the currencies just to discuss what we're seeing. We're seeing a huge move in stuff like the Australian dollar. And Canadian dollar is actually doing pretty well as well, but let's just zoom back a little bit. Yeah, Canadian dollar is definitely looking a little bit better, but the currency that takes the lead, in my view, is going to be the Australian dollar, definitely. And in terms of shorter time frames, GBP is looking decent as well, but the Australian dollar is really showing relative strength against the other risk-on currencies, whereas you want to be pairing the risk-on currency with a weak risk-off, like the US dollar, like the Japanese yen. So all these are... I definitely did this wrong. So we got the USD, odd. So actually this is not right, so I'll change that a little bit later, because this wouldn't be a comparison with all of them. That was my bad. But I have another one that is, and we see that Canadian dollar is doing well, Australian dollar is doing really well, and then the US dollar and the Japanese yen is doing very poorly. So odd USD, GBP USD, odd JPY, those type of pairs I think would be good for long opportunities in my personal belief. Dieselman, what is causing the USD drop? Okay, so that's a good question. Let's discuss this a little bit further. Let's go back to here. So, let's understand what the US dollar is used for, right? What does the US dollar provide for ROI? Extremely little, if nothing, right? Bills, treasury bills and bonds provide some level of a yield. But if you're just holding cash, you're losing value every year because of inflation, because of the increase in the monetary base. So why would people pick cash over equities? Well, they're fearful that the stock market is going to go down, they're uncertain of what the future is going to look like, and they're anxious about losing capital. So what did we see back in March? This was when the stock market absolutely collapsed. The US dollar boomed. It went up exponentially. Look how fast it went up, right? Why was this? Fear, uncertainty, worry, right? That makes sense. What do we see right now? Well, the stock market is booming. The NASDAQ is hitting all-time highs often. Currencies that are risk-on, that are speculative, are doing very, very well, right? Volatility in the financial markets, like the S&P, is decreasing. Overall indexes globally are breaking resistances, holding supports, carrying its momentum in the uptrend. There's optimism, hope in the air. If you're a global investor, in this environment, are you looking to be conservative or are you looking to capitalize on these appreciating assets? Probably you're wanting to capitalize on these appreciating assets because it's continuing to move to the upside. You're seeing validation that there's demand coming in, buying the dips, holding supports, breaking resistances. These are the type of things that global investors are looking for when trying to invest, right? You want to be carrying the trend. So the overall trend is risk on. People in the global macro investment pool are looking to take on risk. Where do you take on risk? You don't take on risk in cash. You take on risk in equities and other instruments and assets that provide a higher ROI. So people are selling the US dollar, which they need to buy that asset that will potentially appreciate at a greater rate than the US dollar. That is why the United States dollar is dropping right now, because it's a risk-on environment. People are looking for speculative investments and trade opportunities that provide them a greater yield than bonds or bills or just holding cash. If there is another worry, if there's a second wave, if there's lockdown, if there is a stock market correction crash, if there is worry, fear, uncertainty in the financial markets, there's going to be more bids, there's going to be more demand in the US dollar. Because more people are going to be looking for safety, security, and ease of anxiety. And when there is more of that emotion in the markets, people will flee to the US dollar. This move was when the fear and greed index was at like 5 to 1. When there's extreme fear, people move to currencies. Look at the Japanese yen compared to Australian dollar, New Zealand dollar, GBP, Canadian during around, mid-early March. Very similar situation. The Japanese yen got a huge bid compared to a lot of these other currencies. So hopefully that answers your question as to why the US dollar is dropping. And also, not even, that's just one side of it, right? The other side is the currency proliferation. Central banks are printing lots of money. If you increase the supply by a substantial amount and the demand stays completely the same, you're going to get a decrease in the value. Now, if you increase the supply and the demand decreases, that's going to give you even more of a discrepancy, which is going to even further and even more aggressively push the value of the US dollar down. So I do not think that the US dollar is in a good position right now, and I don't expect it to hyperinflate or inflate extremely quickly. Things in economies take a long time, but I think there's more people that are aware that the United States dollar is literally a piece of paper that you give confidence to, that everyone else in this world give confidence to, but it has no true intrinsic value. People are coming to realize this. And I think people are going to be looking at safe haven fixed assets or fixed supply assets like gold, like silver, and cryptocurrencies, which is a little bit more difficult to get into if you are not tech savvy, but I do think that it will provide a even greater opportunity for people who are aware and able to get into the space, in my personal belief. So that's going to be my discussion on the US dollar. Lots of money printing. Just quick discussion of how much money they're actually printing. Look at this money supply around the world, right? If you're looking at the United States in the last 12 months, we see that we've printed just under 25% more money. The total money supply has increased almost 25% in the last 12 months. Just in the last 3 months, it's at 13%, a little over 13%. It's unsustainable, right? If you're looking at Argentina, if you're looking at Turkey, which is seeing a lot of inflation, they're at 39, right? But change in 3 months, it's about 12. We're seeing higher inflation in the USA in terms of increase in money supply than places like Turkey. And their interest rates are already at 8% or something crazy. So the states are in a very difficult position. All right, so we're going to talk a little bit more about metals because we did a little bit. But that was a little bit of a discussion on the currencies that we're really mainly looking at. And I'll restart this a little bit later. So I'm just going to keep that right there for now. And then we're going to be looking at some metals because metals have been on an absolute rocket ship. So silver, I did sell at my take profit. I basically took the rest of my profit and I'm just going to see if it's able to give me some sort of continuation pattern. I didn't want to avoid trading my plan, and I just traded my plan. That's what it is. Could have made a little bit more on here because I was taking profit at this high right here. If you're looking back at this high right here, 19.6, that was the high that I took a lot of my profit on, and it's gotten a lot higher from there, but hey, made 4.4-ish% risk reward, which is pretty damn good. And now I'm just looking for the next continuation pattern for XAG on the 15-minute chart. We do see some consolidation. We do see, like, for example, this ascending wedge that melted to the upside, sort of like this. And then we also see a potential high base pattern, which is right here, rectangle. So you see a basing where you see a short-term equilibrium between the buyers and sellers, where you see a hesitation from the buyers breaking the resistance, but you don't see the comeback from the sellers pushing the price below a support. This is a nice equilibrium between the buyers and sellers, and if we do see a nice break and retest, could be a pretty good continuation pattern to follow the trend, sort of like that. That would be the opportunity that you'd be looking for a basing pattern, but it's looking pretty good. We'll see where it goes. We'll need to get some more price action before we really look to trade this, but it's looking like a decent opportunity. But what I would really like to see is something along the lines of this, some formation like a symmetrical triangle, or we'd be looking at like a descending triangle or a descending wedge, something like that. That would be my ideal outlook for silver because we saw it back. If we're going to the 4-hour chart, this was a major triangle and this was a wedge. So I really would like to see another smaller, shorter term like this. So if this is a big move, I want to see something that is smaller, more condensed, kind of like that. That would be ideal, right? And then you're looking for continuation patterns like that, and then you're just looking for another entry, and I think that continuation pattern will continue the overall trend. So that's going to be my view on silver. I've basically exited my trade, and I'll just see if this will give us another opportunity, because theoretically trailing stop losses would have been good, but that was not in my trade plan. My trade plan was to take my profit at a predetermined level with an awesome risk reward, and I did. So now I'm just waiting to see what silver does. Gold, we did say it was looking like a really good opportunity there. Hit the target of 1842, and we'll see where it goes from there. If we're looking at the daily, major move right to our key level here, where we can see it was a significant level back in August 2011. a long time ago, as well as the overall structure of this wedge gave us, where it was this wedge turned into high base, and then just take the size of the high base, kind of like that, and that's your next target at 1842. So we do see that hit right now. And I kind of want to see a bit of a consolidation here. If it continues to go up, I might miss a little bit of a move, but you know, I'm making pretty damn good fucking money on silver and gold here, and I don't really... Oh, wow. Getting into the smaller time frames, that looks really tasty. Wow. Got a nice key level of resistance. Some higher lows. That is looking like a great continuation pattern, in my personal opinion. And with the US dollar absolutely collapsing, I think global investors are looking to further get exposure in gold. So that's looking pretty decent with high R-vol, which is great to see. A lot of traders looking at this asset. So that'd be something to be interested in for sure. I'll just keep this here, but it'd be nice to see a little bit of a pullback, but I will be keeping a pretty close eye on gold. Also, we'll quickly look at the gold and silver ratio. It's just absolutely plummeting, which is absolutely awesome for silver. So I think we're going to have some level of hesitation, because if we're looking at the weekly, we do see this is a key level of support as well. So we were able to hold this previous support zone, absolutely plummet, and now hit our next support zone. I think the next major zone that we need to pass is going to be this current level right around here at around 87. But if we're able to pass this zone, we have a lot of range to be working here. Don't know if we're going to go all the way to 30 or anything, but in terms of this wedge, actually what we can do, just to see where it potentially could go to, is get the arrow, find the breakout zone. So yeah, 50, somewhere around there, we can see key level of support somewhere around here. So we'll go like that. So we'll just put it at 50. That's going to be the possible target. So look how far of a move this has to go. So if you think that you're too late on silver, I would say you're not too late on silver, but I think that a possible move to the downside in the gold and silver ratio is a probability, and we are going to be looking for further continuation in the gold and silver ratio to the downside, which means that we're going to be biased towards longing silver compared to gold, although we do think that both silver and gold are going to be continuing the upside move. So that's going to be gold and silver. Not a whole lot more to discuss. Like I said, I am looking for a little bit of a pause, a consolidation in silver. In gold, it looks pretty decent, but in silver, I'd like to see some level of a correction, consolidation, and a continuation pattern to the upside. Now looking at crypto, going to give it a little bit of water, but diving into the realm of crypto, because there was some bullishness in Bitcoin. We didn't see some extreme level, but we are going to be looking at that still today. Just quickly looking at these FX markets here. Lots of movement. Like we said, Australian dollar, Australian USD, AJ or AU, really good opportunities for a long, in my opinion. New Zealand US dollar, so definitely just risk on trades only at this point in time. So quick look at the BTC price now. We broke this descending zone, but I'm really wanting to see the price break market structure. So what do I mean by this? When we see a significant high form right here, that would be a market structure. And then we're making lower highs right here, right here. So we're decreasing the highs, making lower highs obviously, and then we are increasing the lows. We see these lows that are getting respected, right? So we see type B, type B, type A, and then we see a type A and a type B right there. So we know that this tight range is contracting in volatility. The price action is getting smaller and the moves are getting shorter in terms of the distance between the resistance and support. at one point, at a certain point, there's going to be an expansion in volatility. I do not think that expansion in volatility has occurred yet. We are still contracting in the volatility. I'm going to use my horizontal zones more than my descending and ascending zones within this current structure, just because there's going to be noise within this very tight range that we're working with. So we haven't seen the recent high get broken. We can even take it a step further and get a little bit more aggressive and move down here at around 93.75, and we still do not see the high getting broken. So the contraction is still taking place within the price action of BTC in my personal view, and I can further validate this with another chart. So let's go to this chart, which is going to be the Bitcoin Historical Volatility Index, and we see it further move to the downside below what we saw back in March of 2019 before the price went from 4.2K to 14K. And then the last time we had this low volatility, which was even greater in terms of the reduction in volatility, was October of 2018, where we saw the price move from around 6.5, 6.2, all the way to 3.2K. So we're seeing a massive depletion in or decrease in volatility. So I do think there's going to be a really significant, large move coming to Bitcoin, as well as the altcoin market, because Bitcoin is going to be the leader, the king, the initiator for a lot of these big major market moves in the altcoin market, in my personal view. So when we do go back and look at the two potential options that we have within this price action, looking at the Bitfinex chart, let's look at the two scenarios that we can see. The first scenario, if we are going to continue the risk on sentiment that is indicated by the equity markets as well as the currency markets, this is going to be the first option. Oh, let's go here and zoom back. Right? I don't know if it's going to go all the way up this way, but the overall structure, I think, is going to look like this, where we first see a massive expansion in volatility, where a lot of these bears, a lot of these shorts are going to get caught off guard. We know that there's a decrease in velocity. The last time we saw that was right here, as well as right here. Let's take this off and draw that again. These were the two previous times we've had massively low volatility. First time right here, move to the downside. First time, or second time, move to the upside. This is the third time we're getting the volatility to be extremely, extremely low. So in my personal view, what we're going to be looking for is, first option is going to be this way. You're going to get a massive impulse, like we saw, a massive impulse, consolidation. This is your continuation setup, and then you're going to get a further continuation of the move. So what we're looking for is continuation patterns somewhere around here. And then we're looking for a continuation move to the upside, and that is where we're going to really start making some solid profits. That's going to be the first option. And then if we're looking at this large macro triangle on the daily chart for BTC, I'm just getting this opening of this macro triangle and raising it to where we see the breakout, which is right around here. So we're going to go right around there. We do see that the potential take profit is going to be around $31,000 for one Bitcoin, which from around, let's say, 11K is obviously a massive move to the upside. So that's going to be option number one. And a lot of things would have to change in this circumstance, but one thing that shouldn't change is the overall risk sentiment or the correlation between BTC and other traditional assets is going to change quickly, because right now Bitcoin is positively correlated with the S&P 500 and negatively correlated slightly with gold. So it's considered, from the global macro standpoint, as well as just looking at the mathematical formula for correlation, Bitcoin is considered a risk on asset and has similar attributes in terms of the kind of, I would say, instrument that it's used for as a speculative instrument compared to a safe haven like gold and US dollar right now. So if the S&P moves up, I expect this. If the S&P moves down, this is another story, and we do have that as well for an option. So let's just delete that, and then look at, take away this. So this is going to be, in my opinion, the second option of the two, where if we see a drop in the S&P 500 where risk on assets are moving to the downside, I think we could see something like this, where you see a massive drop and then you're looking for continuation patterns, and then you're going to see another move to the downside. And we do see, if we are looking at this large triangle, we do see this ascending level of support connect the higher lows. So that's going to be option number 2. I would say within this zone, it's just a lot of noise, and I would rather see validation of the momentum and the expansion and volatility before I jump into the markets. One thing that you could also do if you are expecting a pretty aggressive move would be to set stop entry orders. Maybe one above the high, maybe one above the low, whichever one it triggers. You close the other one, or you could do one cancels, other orders, whatever the case may be. There's a lot of ways to use orders to your advantage, but these are the two different scenarios that I see for BTC. And I have been leaning a little bit more on the sell side throughout the consolidation, but if we do zoom into the smaller time frames, it's looking a little bit more bullish. If we break 94.50, that to me is definitely going to be a situation where we want to be looking for opportunities to the upside, and then we do see that there is heavy resistance around the 10K range, but the fact that we are breaking a key level of resistance suggests that we could be continuing the further upside momentum. And we also see confluence with traditional markets like the S&P, the NASDAQ, Russell 2000, all risk on instruments continue its momentum to the upside as well, validating that buyers for risk on instruments are in the market. So that's going to be the two different options that we have. Let's just take those away, but we'll see where it goes. Like I said, key level is going to be 94.45 for a breakout to the upside, and then the key level to the downside is 9K. So that's going to be my BTC analysis. Let's look at a little bit more on the crypto side of things. Not a whole lot on the total market cap of the altcoins. Oops, did not want to do that. Let's stick that to the daily. I want to change this one to, let's say, the 12-hour. You see a little bit more of a consolidation moving upwards, which is great to see. So let's just go to the weekly and quickly just draw this up, because I did accidentally close my entire BTC analysis. So those are the two key levels where you got resistance and support. It's nearing a resistance zone, and we can draw in a trend line as well, but I'll just leave that there. And then when we are going on to the smaller time frames, we do see previous resistance, new support, zooming out, extending that. And we also see the same thing happen right here. So very structured range that we are stepping up into, which is good to see. And then we're just seeing a possibility of a break and a formation of a previous resistance turned into a new level of support, like we've seen in the past many times within this zone. So we're just seeing a high base right now. If it moves to the upside, that would indicate that the altcoin market is seeing higher appreciation, and they are looking like it's going to further the move towards this previous resistance right here at around 110 billion in terms of market cap. So looking more favorable for the alts. And then this is the next zone that we're looking at. We do see this descending zone right here. Let's get that red. And then we also see a horizontal zone right around here. Let's just move that a little bit further. And then I also see this descending zone right here as well, which isn't perfect, but just like so. So that could be an option for a series of lower lows that's still holding. And then I will close this. And then I will put a projection there, and then we'll be good for the BTC dominance, which has not really moved much, but in my opinion, it's really good to understand where BTC dominance is, because it's going to be a pretty important aspect to be considering when you are looking at the crypto market, especially if you're focused on trading alts. You really want to be mindful of the BTC dominance chart, which is not really doing a whole lot right now. If we're looking at the 6 hour, we do see really just a consolidation right at a major level of demand. So we'll see where that goes. It's not really doing a whole lot right now. And then quickly looking at some of the more relatively strong altcoins here. Not much has broken out. Let's just go back. I don't want to look at that too much. Not much has broken out. Stellar is ramping up to look like a potential opportunity. Cardano also looking really good for a possible symmetrical triangle continuation to the upside. I'd love to see another move on Cardano where we make some good profits, because we made really good profits last time. VeChain is not on here, which I should get up. Let's open another one and just get VeChain on here, because VeChain was a really good trade that we made last month, as well as tried to go this month. And then let's do 4, so let's do VET. VET is looking less ideal, to be completely honest. Let's just put VET on here. Oops. VET, USDT, and then we're just going to go into a double. And this can be something like XRP. Okay, so let's look at VeChain here. Let's do a little bit of technical analysis, going from the daily and working our way deeper into the price action. So we know that there's a key level right around there. I don't love that massively white line. It's a little bit too aggressive for me. I'm going to make it nice and small and nice and dotted. Very easy to see, very light. And then we see some pullback, which is good to see, hitting a key level of resistance. Let's go to the 4 hour and draw in our descending zone right around here. And that can be red. Pretty well respected all around, I'd say. And it's a good descent, or it's not too aggressive. Like Stellar Lumens is pretty aggressive in the move to the downside. And then we also see, if this holds, a possible ascending zone right here. But it's a little bit messy there. If you go into the 2 hour, it might look a little bit better. Yeah, it does look a little bit better. It is respecting the zones, but it's just a little bit messy where it's not absolutely precise. But you might not get that every single time, and the structure could still be great. And I'm just going to put the projection there. Make it green, and then that's going to be the overall triangle that we're going to be working with. And we also want to see a break in structure right here as well. So we're not just looking for the break in the price action structure, but also we are looking for the break in the formation of the market structure, which is either higher highs, higher lows, or lower lows, lower highs, or consolidation failing to make a higher high or lower low. And this is a contraction where we're forming lower highs and higher lows, squeezing the price, contracting it towards the apex of the price action, which is right around here. So that is VeChain. That is these cryptocurrencies that we see right here. And that is the completion of the global macro update. So we'll keep everyone updated in terms of the altcoins, but BTC is in a very pivotal place, that is for sure. Alright, so that's going to be the end of this video. Hopefully you enjoyed it. If you have any questions, drop them in the comment below. If you found this useful, educational, entertaining, it'd be great if you would subscribe. And if you found it really enjoyable, it'd be great if you would like it and let other people know about this free global macro update that is provided on a daily basis on the weekdays, where we go over the overall market sentiment, understand risk on versus risk off, using multi-asset analysis, not just opening up the S&P, not just looking at Bitcoin and saying, I think it's going to go up, I think it's going to go down. But we're doing a lot of homework, a lot of due diligence, and trying to understand the overall financial markets through the perspective of risk on or risk off. Very binary, very simple, but there's always going to be difficulties in something in the financial markets because nothing is black and white. So that's going to be the end of the video. Hopefully you enjoyed it. Until next time, have a good one and safe trading.